Good evening, viewers. Today we are going to proceed with our computations, and in the first video of IS 16, that is PPE, we spoke about and we did some numbers on when we have a revaluation loss in the first place, and later on the asset is revalued at a later date, and we saw how we can be able to reverse the previous loss using the current gain we've got. But in this circumstance, we are going to look at a scenario whereby we have begun with a gain, and in the next year we've got a loss. How are we going to be accounting for that? Without wasting more time, let's kick off and we'll see what we can do in the shortest time possible. That's basically, let's try to go into Excel and see what we can be able to do as far as this is concerned. And we are looking at how we can set in. So as the Excel loads, we have a question says ABC Limited acquired land in 2018, which originally cost 40 million, meaning the cost of the land was 40 million in 2018. But now in 2019, we are seeing that the land was revalued at 45 million. And in 2021, the same land was revalued for 36 million. We used the previous question, but we just amended the figures to help you follow up easily on what we are doing, so that you can be able to understand. Because I know when you understand these principles, that's why I'm using basic examples, so that when you understand this, you can't be able to fail to have these things done when we are solving more questions as they are going to be coming in. Remember, our last video on IS 16 is going to be on how are we going to be accounting for the an asset of PPE at initial recognition. Then we try to look at certain items and we see how we can accumulate them up, and we see how we can be having. So for today, let's continue with what we are going to be looking at. It's a simulation 3. If you have the notes, you could be able to follow up. Okay, I can maximize this, have something. Okay, I think that one's enough. It can help us. Okay, that one will be enough. We said it is ABC Limited. ABC Limited. And the question says, how are we going to be? The question says it required show how the land will be accounted for in 2019 and 2020. I put for these solutions so that when you are doing them alone, you'll be able to follow up and you have something that can guide you as when you are doing these numbers. That's basically what we are going to be doing. And we said whenever we are starting any question, we start with summarizing the information that has been given to us. And we've seen that the cost in 2019 was, the cost as far as 2019 is concerned, it was, let me try to make this, it was 40 million. and it was revalued to 45 million. It was revalued to 45 million. Now this was made in 2019. Then we try to look at the revaluation that was done. Then it also revalued this was made in 2020, and the cost was 36 million. So those are the things, those are basically the items that we have. So we go to try to see how we can be able to determine, maybe we can bring in a formula, because what we are looking at is accounting for gains and losses. And if you didn't get well of how we do, how we define the revaluation gains, you can be able to watch our previous videos and be able to understand what those are meaning. So revaluation gain, said a gain or loss, these things cannot occur at the same time. An asset can't be revalued at upwards and at the same time revalued downwards. No. We said it's going to be the revalued amount we less the carrying amount. Here we are lessing the carrying amount of the asset at the date of evaluation. So having seen that, we can try to look at, because they told us we are going to be showing how we are going to account for these gains and loss for the above transactions in 2019 and 2020. So we got 2019, we said we had a revaluation gain. Sorry, we had a revaluation. Evaluation was 2019 was 45 million. Then the carrying amount, since this is still the same, a non-depreciable asset, the carrying amount will remain the same. The carrying amount for 2019. Some questions you may find that the carrying amount, but they have given the carrying amount of the asset at 2018. So you make sure you convert it up to 2019, which is 40 million. So now here, we are seeing that the revalued amount is higher than the carrying amount. So we have a revaluation. We have a revaluation gain. A revaluation gain, which will be the difference. It will be equal to the 45 million with less the 40 million. And this will be giving us 5 million as the gain. That's the gain we had in 20. That's the gain we had in 2019. Maybe I can make this one a bit so that you know that these are hard-coded figures. These are the figures in the question. Okay. Now we try to look at, they told us we look at how we are going to be accounting for these items. I told you if you can't make these notices, you write what you are doing, that this, like if let's say you have got the end result as a gain, you tell the examiner the implication of what you've got. Meaning we have got the gain, you can say that the gain of 5 million will be taken to the other comprehensive incomes, the profit and loss, and the asset will also be carried at the revalued amount. But if you have any way you can put a double entry, it makes more sense. It gives someone more explanation, because when you bring these debiting and crediting, at least you are trying to explain something. We said if we get a gain, what we do, we debit. Since the asset again means, again has two implications. One, it increases our other incomes, and at the same time it increases the value of the asset. Remember we said when assets are increasing, that's an income. When assets are reducing, that's a liability. We are recognizing an expense. That's basically from the definition of the elements of financial statements. We explained those ones, and if you see you are not understanding, please go back and try to memorize those so that you can be able to catch up. So one of the things we are getting, that the land is going to be increasing in value, but it is going to be increasing by 5 million. Remember, it was initially it was 40 million. So it is going to be, when we debit, it means we are adding to the 40 million to make 45, which is the valued amount. So we are going to be crediting our OCI. Permit me to use OCI, but it means other comprehensive incomes in terms of the revaluation gain. But here I want you to get something. It is something I want you to get from here. We said, and this I did not talk about it in the previous video, this, we said that when the asset has a revaluation loss, we don't create a revaluation loss account, but what we only do, we take that figure, the profit and loss. But for a revaluation gain, when it happens, what we do, we can create a revaluation reserve or a revaluation gain account. And this figure of 5 million will be taken as a revaluation reserve in the balance sheet. So I'm going to show you how we do that. But this revaluation gain is supposed to be taken to the balance sheet as a revaluation reserve. Because what you do, of course, you credit. We are taking now this figure to the, we are going to be adding it to our retained earnings at the end of the day. Because putting it in the OCI, it means OCI comes after when you have determined the profit for the year. That's where we have other incomes. We shall see those ones when we are preparing these income statements. But what you have to understand is that these OCI, other comprehensive incomes, it means those are incomes that were there, but they were not as a result of these operating activities. They're not the day-to-day operating activities of the company. Those are the incomes we put there. The revaluation gain, because in the normal situation, you are not supposed to be having these revaluation gains and what? And losses. That's why they are taken to the balance sheet under equity. So I'll show you how we take this. Anyway, we can do, because that's basically what we are supposed to do. Then maybe we can do the statements. Can do the statement of finance. Let me say financial position. Sorry, financial performance. Let me use the exact profit or loss and other comprehensive income for the year 2019. and we come to other. Remember, we don't have depreciation, so we are going to go to other incomes. But these other incomes is not that other income that it reflects after gross profit. This one comes after the net profit. That's where it is supposed to be. Other comprehensive income. Or we could call it OCI, because I've been using OCI. Let me maintain the OCI. And we put revaluation gain of 5 million. Valuation gain of, that's basically what we have to put in our financial, the profit and loss account. Then we try to look at the statement of financial position. This is the balance sheet. Financial position as at the end, as at 2019. Just stop there. As at 2019, we said we are going to be taking the value of the asset at, we said we are going to be taking the valued amount as our, said we are going to be taking under non-current assets, and we put our land, or we can put PPE, because this is the general name that was given to these non-current assets that are used in business. As you know from what we define what an item of PPE is. Okay. When we take these figures, now we are seeing that we are going to be having the value. Now we said we are taking the revalued amount. Even if it is the lowest, we take it, which is 45 million. Meaning that when we go to other incomes or equity section, we can put where we say financed by, but this one we can say equity. Equity section, we said we put the evaluation reserve. We normally call it evaluation reserve. We put those incomes that are, that's why we incorporate all the figures, evaluation reserve, because it may not be one asset. You find that all the figures, you are going to be accumulating them there, which is 5 million. And that's how basically what you were supposed to do for that land in 2019. Even this financial position may make it a bit so that you can be able to differentiate. So we go into 2020, and we see what are we going to be taking. Remember, this asset, this amount that is reflecting at the end of the year, it will be the amount that will be there at the beginning of next year, because it is the one that is at the close of the year. So we try to look at what we have and we see what we can get. They told us the land was revalued in 2020 and the amount was 36 million. It means there, this one we had 45, but at the end of the 2020, we are seeing we have 36 million. So it means we had a loss. So we go to the revaluation amount or the revalued amount. The revalued amount, we are seeing that the revalued amount is 36 million. That's what they are telling us in 2020. But the carrying amount, since we don't have depreciation, the carrying amount we are seeing it is 45 million. It's not 40 because we ended in 2019. So when we are going to be having a revaluation loss, which is going to be got after deducting the 36 million minus the 45 million. And when we do that, we are able to get a loss of 9 million. And as this 9 million, what we said here is that this figure is going to be reversing the previous gain we had. We can't recognize that we had a loss of 9 million, the whole 9 million, and we take it. We first reduced the 5 million, which was the gain that we had last year, and we take the balance. So what that means, it means we are going to be debiting our land. And the reason why we are debiting our land, because there is something, sorry, we are not debiting the land, we are crediting the land. But remember, we said whenever we are doing these entries, we start the debiting entry. We are going now to be debiting our profit and loss. Profit and loss account. And this one is going to be our revaluation loss. Which revaluation loss was, but here we are taking only the excess. It is 9 million minus the 5 million, which is here. It means we are only taking 4 million. And we are going also to debit again the OCI. The OCI, we are saying that this is going to be reversal of gain, the gain we got. And we are reversing only 5 million because that's the gain we had in the previous year. Then we are now crediting the asset because the asset, we are crediting the land because the land is now reducing in value. And it is reducing by the total of 9 million because it reduced from 45 to 36 million, meaning that even when we are taking, when you are taking these figures to the financial position, the value of the land is going to be at 36 million, not at 45. Hope you can be able to get that. But now I want you to again try to look at how are we going to be differentiating these items. Here we are having an element of revaluation gain, revaluation reserve of 5 million. But here, these 4 million we have here as a revaluation loss, for it is only going to be reflecting in the income statement. We are no longer going to be having the revaluation reserve because we said whenever it is a loss, we don't create a revaluation. Now this one is for 2019, but we wanted the profit. Let me just copy this. But now here we are popping for 20. This is 2019 now. This is 2020. It's 2020. So we are going to be having under our operating expenses. We are going to be having a revaluation loss. Valuation loss, which we have here of 4 million, which was the balance after offsetting the other gain. And that's going to be that because we don't have depreciation. If depreciation was there, we could put it there. Then maybe we can look at the statement of, let me copy also this one. Statement of financial position, but this one we are looking at 2020. So it's going to be under our non-current assets. This non-current asset, we are going to be having land. Said you can say PPE, but this land is now going to be carried at a revalued amount, which is the 6 million. And we are not going to be having any valuation surplus because we never had a gain at the end of the year. And that's basically what we do with an asset that has registered a revaluation, with an asset that has registered a revaluation gain. An asset that has registered a revaluation gain in maybe in the previous year, but this year it is showing a loss. So basically that's what we do. Maybe to remove these, can try to remove these grid lines, and we see this figure as well. And that's basically what we were supposed to do for this. Maybe even these double entries, I highlighted them because they are very important. Don't ever forget. If you see that you can be able to do this, then you'll be able to put them there because you'll be earning some marks for them. Thank you for that. Till we meet for the next one, which is going to be from a past paper, and it's going to be looking at some of the items that are going to be depreciable items, and at the end of the day, we were required, or we were supposed to determine the initial cost of an asset at the time of recognizing those assets, as we are going to be seeing in the next video. Thank you. Until we meet again.